This is my stock market update for the week ending Friday, September 11th, 2015. It's been a while since my last update due to vacations and increased workload at work, but I'm back. The market has suffered a lot of technical damage since my last post. We had almost a 12% decline from the highs at the worst point going back 3 weeks ago. Since then, markets have bounced back, and they're currently forming this triangle formation drawn on the daily chart shown before you of the SPY ETF. Markets have about an hour left of trading today and Friday, but we'll probably probably close the day within the apex of that triangle that I've drawn on the chart. And I think the fact that we're making higher lows shouldn't be ignored. I think there may be one possibility for a push higher in the weeks to come, but of course that's only pure speculation. We'll have to see what really happens. Okay, now switching to a weekly chart of the SPY ETF, and this is sort of my working roadmap for the markets over the weeks and months to come. So you can see first on the chart, it's the topping pattern where I've indicated. It's been a period of 6 to 9 months of consolidation, and we finally broke down and have fallen out of that pattern. We got a huge increase in volatility, more so than what we've seen recently. Fallen about 12% from the highs, and we've currently had a pretty decent bounce off the lows between that 180 to 185 level on the SPY, and that corresponds to the prior low seen in October of 2014, the period I like to refer to as the Ebola panic. The trend line that I've drawn in gray is indicated by that gray arrow. That's currently my working worst case scenario for the market, and it would be a 20% decline from the highs. And of course, this would probably unfold over a period of months, not weeks. And that's really the worst case scenario. And I don't really think it's anything to be too worried about. Even if we do decline that amount from the highs, I think this would represent a pretty incredible buying opportunity, and it would probably do really no harm to the long term, the very long term picture of the bull market. However, over the weeks to come, I'm thinking there will probably be one last push higher before we either retest the prior low set at the the 180 to 185 level, and my current target for the retest, it's also shown on the chart. It would correspond to the basically the red trend line, or the 10 weekly EMA. Okay, so the next chart it's a weekly chart of Michael Kors, and I entered into this position on Tuesday. I did take about a couple of weeks off from trading following that huge increase in volatility a couple of weeks ago. I just wanted to see how how things would play out, and it looks like we've stabilized a bit more over the past couple of weeks. So this this idea came to me. It's basically, I noticed that you had a huge decline over the last several months, and now it looks like the price it's really trying to make a push above that 10 EMA, or the red line drawn on the chart. And basically my entry was at the cross above the 10 EMA, or at 44.30. Price it's currently holding around that level. It's making a push today to try to stay above it. So we'll see what happens in the weeks to come, whether or not we push higher. A lot of it's going to determine upon the overall market conditions anyway, and I've set my stop loss accordingly. It's a pretty easy trade. We close below either this week or the prior week's low. You probably want to exit out of the position. Okay, the next idea was AFSI, and I entered into this position on Tuesday as well. Basically the idea was that any push above the descending trend line drawn on the chart would be bullish. So basically on Tuesday we gapped up. The stock sold off a little bit, and I entered into the position around a 58 level. And you can see we're currently now making a push towards 60. So this trade is currently profitable. Other confirmatory indicators that I had used was the MACD. Basically, was making a cross above the signal line. MACD histogram as well. It made a change from negative value to positive value. So that gave me more confidence in the trade as well. In addition, you can see, looking at a monthly chart, we've also pushed back above the 10 EMA on the monthly, so that's another positive. We'll see where this trade goes in the weeks to come. I may raise my stop loss here a little bit, just to take some risk out of the position. But no one really knows where the overall market is going to go from here, and if we did, see a meaningful bottom over the past, develop over the past few weeks, then you'd probably want to hold on to your current trades. But then again, no one knows, and I suspect it will be another push lower before we see a final bottom develop. Thanks for listening, and if you like these ideas, you can follow me on Twitter at DeconstructMad, where I post all my ideas along with entries and exits. The material is educational only and doesn't represent recommendations to buy or sell specific securities. Thanks again. Have a good weekend.